listening to The Mortgage Scientists, exclusively on the Pod Station.
Hi, I'm Dave Forrest.
I'm Chris Hume. Together, we are the Mortgage Scientists.
Hello, Chris.
Hello, Dave.
We're back.
We are.
Episode 11.
It is. I can't believe it's August and summer already.
I know. It's absolutely crazy, but it is nice and warm. We've had some good weather. Today, we're going to discuss credit score versus credit check.
Yes.
Which is a strange little part of our market in the mortgage world, isn't it?
It is, and it's only one word difference, but it can make a world of difference,
It can make a world
can't
of difference if you can get your mortgage. We'd probably say most of your high street or mainstream lenders will credit score.
Yeah.
What's credit score?
Credit scoring is this magical computer says system. When you submit a decision in principle, a mini application if you like, to a lender, part of that is that their computer will look at that information, have a look at your credit file, and will create this magical score from their own sort of interpretation of things. And that is credit scoring. If your score is above the minimum that they will accept, they'll probably accept to lend you the money. If that credit score is below, then they will probably decline it or maybe refer it for a manual overview.
Each lender will have their own level of credit score that passes, won't they? Because people don't know that. They think they've got a 999 on an Equifax. So we discussed that in a previous episode. But the lender sets their own limit, don't they?
They do. This is where those arbitrary figures that you see on your credit file from whether it's Experian, Equifax, TransUnion, whoever, take those with a pinch of salt. That number is really just an indication of whether you're better, near excellent, or near poor. But every lender has a different view on what they like in an application. As we've looked at in episode 10, certain elements of missed payments may or may not appeal to a lender. So your high street lenders may not like 2 or 3 missed payments in the last 12 months, but some of the off-piste lenders may be absolutely fine with that, but their credit scoring systems are built to analyse that info and make that credit scoring decision at that moment in time.
And there's so much that gets involved in that decision, isn't it? And again, different lenders have different things. Effectively give you points and get you over the line. So you could be 1 point over and you'll pass, 1 point under and you'll fail.
Some lenders as well will have a pass A or a pass B or a pass C. I won't name the lender. Depending on what the level of that pass is, depends on whether that lender might offer you better rates or not. Certainly with that lender, if you're looking for an interest-only mortgage, you have to get a pass A. Yeah. It's quite an important element. It's interesting that lenders will tweak these numbers.
This is the unwritten thing, isn't it? We don't know this, but we know they do it. If they want some business, they might tweak that a bit.
And make it easier to pass,
And if they're a bit full up and they want to not get some, they can tweak it down a little bit. So we sort of know that happens a little bit. I think probably your skill as a broker is to know those systems. And obviously we've been around a long time. We get to know the systems, don't we, and how they work. For instance, some lenders, a little bit more deposit might get you to pass.
Yeah.
Where if you were bang on, say, 90% lending, 10% deposit, it might fail. But if you're at 89.97% or whatever the figure you can come up with, that might be putting an extra £100 deposit down. You pass and you get that mortgage rather than having to go with a lender with an inferior product. But as a client doing it direct, you wouldn't know all that.
You wouldn't, but you wouldn't really know which lender appeals to your circumstances or which lender your circumstances are appealing for. We know where those elements are.
Yeah. We're just going to go to a commercial break. We'll be back after this short message.
Do you have a passion, hobby, or expertise and want to share it with the world? Why not do a podcast? The Pod Station offers a wide range of packages to make this a reality, ranging from training and support for those who have no idea where to begin, to podcasters who just need somewhere to host their show. With prices starting at a mere £15 per month, you can now get involved in one of the fastest growing entertainment forms in the world without all the headaches. To find out more, visit thepodstation.co.uk/station-packages. And remember, those with passion, podcast. This episode is sponsored by Dunkin' Biscuits, a biscuit lover's guide by Chris Hume.
But other than credit scoring, we do have lenders that will do credit check.
And that is a whole world where, although they look at your credit file, they're just checking it over. They can then make a decision if there is something on there that might fit with the criteria. Or I always say pros and cons. If you're looking at a client's profile, is there something there that a lender might not want to do, but there's so much else that's good about the application that those credit check lenders will pass it?
Yeah, because credit checking is a more manual process. There is a human-based decision, which as brokers, we love those because we can have an argument about it, can't we? We can represent the client's circumstances to the best of our knowledge and appeal to an underwriter's better nature to agree a case when they're just credit checking and taking a human view.
Yeah, if we see a lender that just credit checks, we go, ooh, here we go, we'll have a word with these and we'll see what they do, what don't they do. And it can just mean you get a mortgage when High Street have said no. Yeah. The bank that's likes to say yes says no. We can then get them a similar product, really.
I had one last year where a client had a very nominal default on the utility bill, less than 100 quid. But because it was so recent, the High Street lender's credit score said, no, don't like it, not going to do it. We approached a High Street credit check lender and they looked at it and said, yeah, we could see it was a blip. No, the amounts were fairly insignificant. If the client knew about it, they could have just paid it. Yeah. And they agreed to lend the money. So that's a very, very key difference between credit score and credit check.
While the credit file is an indication and it's great to have a high score, I remember back in the day everyone was always worried about having a search on your credit file. And I think probably 20 years ago it's probably a bit more important, but if you look at someone's credit file now, everybody searches you, don't you? Your home insurance, your car insurance, you make an inquiry on this or that, your mobile phone. There's so many searches now. I think probably the searches, while if you had hundreds from lenders, it might make a difference, but I don't think it makes as much a difference.
It doesn't make as much difference because I think a lot of these searches now are what are called soft searches. When you get a copy of your credit file, you can see all these searches from your insurers, your bank, your holiday insurer, your whoever. When you apply to a lender for a line of credit and they do a hard credit search, they can only see other hard credit searches. They can't see all the soft searches. This is where you'll see a lot of adverts. Credit cards are a prime example, where they'll say, see if you can be approved without applying. And this is where they'll do a soft search. You can then decide whether you then go for the full application, the hard search is done. So again, it's a very, very fine line, but try not to have too many hard searches done, but soft search is absolutely fine.
Yeah, and certainly when you maybe make an inquiry to your broker and they're going to do a decision in principle so that you can prove to an estate agent you can get a mortgage, a soft search credit check is probably better than a hard search because then you've got some flexibility to move it if you want to. You're not stuck with that lender, are you?
Absolutely. And this whole sort of credit scoring, credit check scenario is all there to assist a lender's underwriter in making a decision on whether they will lend you the money. Now, that credit file, that information isn't the be-all and end-all. It's also about your personal circumstances. What do you do for a living? How much do you earn? What's your committed expenditure? Loans, credit, childcare, school fees. All these kind of things are elements that an underwriter will look at to decide whether they want to lend you the money or not. The survey, construction of the property, as we looked at in episode 10, are all these various factors. But these are all very human decisions that are being made. And our role as brokers is very much about being able to challenge these underwriter decisions if they're not favourable to our client.
Yeah, I think we're going to come on to in the next episode. This leads quite nicely into underwriters and underwriting decisions. They're there to sort of protect the bank, the lender, and it's their money at the end of the day, isn't it? They've got to, is it a good risk to give the person this money? And where the credit score, credit check comes in is quite important.
Yeah, it's one of the tools that lenders use to decide who to lend money to, but how they are also going to lend money responsibly. So I think lenders found in the credit crunch that some of the decisions that they'd made at the time weren't necessarily classed as responsible lending. Yeah. Do accept that lenders don't have to lend money to everybody.
Yes.
Like you say, Dave, it's their money. They have to decide how best to lend it and appear as a regulator that they are being responsible for our clients and treating people fairly.
Fantastic. Next episode, I think we'll have a look at underwriting.
I think we will.
Yeah. See you on the next one.
See you on the next one.
To find out more, email info@themortgagescientist.co.uk.